Like a Lifestyle with another market recap for today, October the 21st, round 3. Still rocking with the Native American music. If you like to learn from who I learned from, get used to the stock market playlist. Get the merch, hoodies, t-shirts, tank tops. Follow me on IG and on Twitter. So, today's market was... I guess it was a green day altogether. Yeah, overall green, I guess. The SPY, the Qs. Well, no, the Q fell at the end. Oh, that's because Snapchat had a shitty earnings report. If you guys remember, one of my first videos was actually Snapchat having an awesome earnings report, and they had a 900% return. Today, they had a shitty report. And they're probably going to have a 900% return to the downside. Snapchat is down like $20, I think. I don't know what that thing's doing. It wants to be slow all of a sudden. There we go. So you can see right here, Snapchat went from around 75 to as low as 52. So Snapchat dropped $20. So that's going to be a very interesting put tomorrow. And Snapchat brought the market with it. Snapchat also affected Facebook and Twitter. And since those are tech companies, the Q follows them. So we're going to probably have a red market tomorrow, at least in the tech world. So that's going to be interesting. The big name for the day was DWAC, which is a Digital World Acquisition Corp, which is a SPAC. A SPAC is a special purpose acquisition company, which is basically a stock market Kickstarter, basically. And this one happens to be run by 45. This is Donald Trump's SPAC. This is the first day of it being tradable, and it went from $10 to $74. The fuck? So of course Trump is going to be all over the news for the next week, and this SPAC is going to be up and down. Now the thing is, there is no shorting allowed on this SPAC just yet because it's new. So once shorting is allowed, it'll probably come back down to $10. I'm guessing it'll probably end up around somewhere 15 to 20 more than likely. But for whoever got in today, shit, man, I could have took 10 shares for $130 and made over $500. I mean, you just don't catch these, but these are those supernovas you never catch. This happens at OTC a lot, but it doesn't happen in regular stocks a lot. There has to be a lot of stuff going forward for that to happen, and especially at this rate. But this is ridiculous. So this wouldn't last forever. Shout out to everybody that made them M's. I definitely didn't make anything on that because I wasn't looking to take it, but goddamn it, I should have. But of course, hindsight is last year. So the one trade I did take for the day is Nikola. Nikola was once a juggernaut company in competition with Tesla until people found out they were full of shit and they actually have nothing to offer. I was very skeptical about playing Nikola because of that. Nikola is just a shit company. But the news said they had a couple of good reports and they're looking to have a lawsuit against Tesla. If they win that lawsuit, Nikola's going to the moon. Please believe me. Nikola's around $10, $11. If they win a lawsuit against Tesla, I'm pretty sure they're going to jump to $50, more than likely. Tesla might lose maybe $100, but it's Tesla. They'll be right back. But Nikola's going to go crazy. Kind of like what Workhorse did when they lost that contract to Oshkosh. They went from like 45 to like 20. And now Workhorse is at like 7. So they really got fucked over. So I took an 1150 call on Nikola. I took one because I wasn't too sure about how Nikola was moving. It was $20 right around here. and it went up a little bit. It went up maybe one. It didn't go up much. It went up to maybe 10%, and it pulled back and stopped me out here on the way down. From 20 to 16. I had a stop loss at 18, but it moved quick and it cut me. So I ended up losing 20% instead of 10% like I normally do for a $4 loss. And that was my only trade of the day. Luckily, I got out when I did, because as you can see, Nikola continued to shit the bed as I thought it would. And that was that. So what did I do right today? I got out of there. I didn't go chasing anything. But I was also looking at DraftKings. DraftKings keeps trading sideways, and I don't fucking like it. But DraftKings is one of those companies that's high volatility. A high volatility company is a company where the option is more beneficial to you to jump in the option immediately than to wait for a setup. I'm gonna say that again. High volatility stock is more beneficial for you to jump into a call or a put as quickly as you can instead of wait for the chart to pick a direction. Now here's the thing, you only have two sides to pick, a call or a put. You're either going to be right or you're going to be wrong. But the way DraftKings works is there's so much volatility in DraftKings. If you pick the upside, if you would have got into a call at the open, right here at $49, you didn't even know what it was doing. The second it opened, you in a call. So let's say you get a $50 call right at the open. That call would have cost you $32. It went up to 61. So let me put this on LHLC. So in the first 5 minutes, the call goes from 32 to 55. That's over 50% in the first 5 minutes. You had no time. You had no time to pick a side. If you would have got in any time after this first candle, you're fucked. Point blank period. You're fucked. Like, waiting for a good setup. Let's go back to the chart. So this is right here. This first candle, 32 to 55. Second candle, it doesn't even go back. It's still 30 cents above the last low. But look what happened to the goddamn call. On candle 2, it gets as low as 35. So if you got in after the first candle, you get in anywhere up here, 40, 50, you got cut to 35, you're out. 10, 20%, even 30% maybe, you're out. If you got in that 50, 35, you're out. If you got in under 50 or the 30%, you're still in here. But look over here, it goes back down to 32. So if you got in at 45, your stop loss is 30. So you're good. You got saved, but anybody with a low stop loss, you're chop city. So with my strategy, at least, maybe I should rephrase it. If you have a tight stop loss and you're playing a high volatility stock, it might be more beneficial to jump in earlier than you normally would just to catch the volatility. Because DraftKings didn't even move that much. DraftKings moved from 49 to 50. It went up almost $1, not even a whole dollar. And that one bit of movement had 100% return in the option, which is crazy. So DraftKings is one of those where you just have to play ahead of time. DraftKings is one. QuantumScape is also one that does that. AMD is also one that does that. Netflix is also one that does that. There's a good handful of stocks that just move, and when they move, you just have to hold on. Microsoft is another one. Some of these guys that if they're going to go in the direction and you pick the right direction, just get in there. Just get in there and wait. Maybe take a smaller size with a bigger stop loss. You know, normally I try to play 3 contracts with a 10% stop loss. Maybe I'll just play 1 with a 20% stop loss, something like that. But yeah, that's the thing. So I'm going to start a list of high volatility plays that if I see one, I know to play it differently. Because DraftKings was pissing me off with the way it moves. Oh, another one. Micron, MU. MU is another one that's high volatility. Whereas if it's going somewhere, it's going. You need to just get in. Now, like I said before, as I start to grow my account, these high volatility boys, I'm going to just take these as swings more than likely. Because it seems way safer and smarter to play it that way. But yeah, so that was what happened for today. I appreciate you guys watching. I'll be here tomorrow for another market recap. And y'all have a wonderful night. Peace.